Joe Biden did take a shot at China about their economic growth prospects into 2022, which irked the CCP. However, I think the CCP's got some bigger issues as they could potentially get walloped by a slowdown in the US consumer. And that's what we're going to dive into in this video. So guys, smash that like button and subscribe if you're new. You're watching More Money. Let's get it. What's up guys, and welcome back to the channel where the goal here is to help at least 1,000 people achieve financial independence much sooner. And let's dive right into this one because this one's very interesting because the heat seems to continue to get turned up between the US and China. So you can see here that Joe Biden's statement that the US GDP might grow faster this year than China has stuck a nerve in Beijing. And you can see here, over the past month, President Biden has twice publicly stated that the US economy might grow faster than China this year for the first time since 1976. And for some reason, I don't understand why this would happen, and this might just be a cultural difference, but it struck a nerve in Beijing. In China, the annual growth figure has always been the most watched economic data point, unlike in the US where inflation and jobless numbers get more attention. And now, as China's target is the lowest in more than 3 decades, which is still a target that economists still see as a bit of a reach, as long as they stick with their zero COVID policies. And I actually believe that they have to turn on the money printers if they're going to even get to that target. And so they didn't mention in the article, but the target is 5.5% GDP growth this year. I don't think they get there, especially with a slowing US consumer. But just going back into this article, slower growth would complicate Xi's narrative that the East is rising and the West is in decline, or Dong Shen Yi Jiang, for which China's strong GDP performance and comparatively small COVID case count provide crucial themes. And so I think what's really happening is this is a situation of saving face, which is of course ego-driven. It's very difficult for Chinese President Xi to admit that his persistence to sticking with the zero COVID policies, plus the other economic policies that have been rolled out during the last around 12 months, have significantly deteriorated China's economic prospects. And so in a time where he's looking to get reelected, this is not good news. And you can see here, I actually stand corrected. The article actually did dive into the growth goals. So you can see here, some officials say that Mr. Xi looks determined to stick with the original growth target to make sure China's growth outpaces that of the US, even if it ultimately falls short of the 5.5% goal. Otherwise, how do you keep telling that same story? And my perspective is you shouldn't really have to tell that story. But I understand that if you've been saying it for so many years, it would be losing face if you stop saying it now. And so what's really happened is they've turned this into a competition of which country grows faster, and it should never be a competition. China's rising, but there's going to be times where there's growing pains, and so China's growth could potentially grow slower. Now, Mr. Biden sought to present the US economy as strong by saying that it may grow faster this year than China's economy for the first time in 1976. And they cited independent experts' projection that the US growth could outperform China this year. I don't actually think that happens. I think the US goes into a recession this year and we actually go backwards, but that's just speculation based on what I'm seeing right now. We'll see how it plays out. I don't see the US growing faster than China, but even if it does, I don't see why this is such a big issue for the CCP. I understand that there's the saving face and the narrative stuff. I get that, but really, this is child's play here. But I did want to sort of speculate where is the anger really coming from, because this stuff doesn't just come out of thin air, and I do believe that it's related to the re-election that's happening. So you can see here, I believe that the anger comes from potentially a place of personal economic failure, in my opinion. So last year, Xi seemed all but invincible, but now his push to steer China away from capitalism and the West has really thrown the economy into uncertainty and exposed cracks in its hold on power. And so Chinese policymakers have stated that they've been alarmed at the end of last year by how sharply growth had slowed due to the stringent lockdowns, the rollback, the clampdown on the technology space, and the slowdown in the real estate from the real estate crisis that's happening in the country right now. And in addition to that, not everybody's on board with China's closer ties to Russia. You can see here, The US is looking to make China pay for its closer ties to Russia amidst the Ukraine situation. Sanctions and US debates are aimed in part at making Beijing feel discomfort over Russia's invasion and dividing the two countries. And so the most important point in this article, I just summarized it here, is that some senior Chinese officials have indicated that they are worried about the costs of the alignment with Russia. This is another item that calls into question the potential that a third term may not necessarily happen for Xi. I personally still think it happens, but I do have to admit that it's less predictable now. I just don't think there's anybody else who's going to take the helm right now. It could happen. More unpredictable things have happened in the past. We'll see how this plays out. And that's not the biggest of the worries in my opinion. Anyways, I think the biggest worry for the Chinese economy and the Chinese average citizen is the potential slowdown in the US consumer, which we're starting to see now. What does that do for China? Well, you can see here that continued US rate hikes could deal China a triple whammy of falling exports, a weaker currency, and sudden capital flight. So on top of zero COVID measures, which cause a slowing domestic consumer, large amounts of unemployment, and a property crisis, lies the additional risk of a slowing US consumer and what it can do to Chinese exports. And so that could really hurt the supply chain, and it could really cause some bankruptcies, and obviously continues the trend of higher unemployment in the nation. And so that's very scary. But with that said, you guys already know that I'm an investor in Alibaba. Some of you guys don't like when I present bad news that's happening in China, but you got to understand, investing in China is a different beast. If you invest in China, you have to take the good, the opportunities, with the bad, which is the economic situation, and decide together if it's worth investing in the country. Now, I'm an Alibaba investor, and I recently doubled down on the investment because I still believe in the opportunity. And I just want to show you here, note that when the share price was at $86 per share for Alibaba, I publicly doubled down on the security. I completely explained my position, and that video has gotten like 8,000 views. And so you guys all saw what I was thinking about and how I was thinking about the opportunity when I doubled down despite the current economic headwinds. And that option contract that I sold became in the money at $100 per share. So in other words, at the current share price, it's very profitable. And I could pretty much take it off the table at this point, depending on what I could sell it for, and take probably around 50% of that premium. But I'm greedy. I like to wait until 80% of it has sort of materialized. And so I'll wait until I can get around 80% of that premium and then just take it off the table and then just continue trading this if the security comes back to around that $85 per share area. And so the question is, why exactly did I double down if I seem to be so negative on the Chinese economy? Well, it's because I'm so positive on Alibaba. And what exactly do I mean by that? Well, you can see here, I do believe that despite the headwinds in China, I have an unwavering belief in Alibaba's core business strategy, which is focused on helping people live better and have better access to necessary goods, especially groceries. And you can see what I've highlighted here on the left here. You can see that while most people are excited about the cloud business, I'm actually, and I've always been, most excited about the growing and further integration of the grocery retailing business. On the far left, you have Taobao Deals and Tao Sai Sai, and then slightly to the right, you have Sun Art and Fresh Hippo, and then below, you have the Sinyal Logistics Network. And the way that they're combining all three of those business units in a way that is very difficult for anyone else to compete with them is what I'm most excited about. And that's why I continue to be a super bull in Alibaba despite the near-term economic headwinds in China. Now, how do you get access to my Alibaba model and all the other opportunities that we're seeing? Because I have said that there's more opportunities other than just Alibaba and Chinese investments. In fact, I think I have 4 or 5 names that on a price to intrinsic value are cheaper than Alibaba. So how do you get access to that? Well, you can get access to all the models at the lower tier of the Patreon. And I don't really talk about it much, but at the higher tier of the Patreon, which is the monthly call tier, you get an epic live presentation with me every month on a Zoom call, and I reserve my very best work for this call. So in order to get access to the monthly call, so you can actually live speak to me every month, you can get access to that at the higher tier. Now, once again, the one thing that I always say is that there's zero risk to you guys, because if you decide to try it for a month and you decide that it's not for you, don't just unsubscribe, message me in the app, tell me that it's not for you, and I'll completely refund your first month subscription. So in other words, it's a zero risk to you. Now, the one video that I did want to point out to you guys is I referenced the fact that I doubled down on Alibaba. That was 2 months ago, and I want you to go back if you've missed that video to see exactly how I was thinking about it, and you can get to that video right here.